Ladies and gentlemen, welcome to my tutorial video channel. This video is on golden rules of financial accounting. In financial accounting, we have double entry system and there are two approaches. One is traditional approach and the other is modern approach to financial accounting. Today, I shall discuss only the traditional approach under which golden rules come in, and the modern approach to financial accounting or modern approach to classifying the accounts and determining which account has to be debited and which account has to be credited will be discussed in some other video. So today's discussion will be confined to golden rules of traditional approach of financial accounting. Now, under golden rules, all account heads are classified according to nature into three groups, okay, or three categories. What are the categories? Real account, personal account, and nominal account. Real account envelops all things which are tangible, that means which can be seen, which can be felt, which can be touched, right? Like cash, building, furniture, plant, machinery, vehicles, etc. And the rule is debit what comes in, credit what goes out. So when a firm is purchasing an asset, a machinery or building or a land or furnitures, then those should be debited. And when the firm is selling some machinery or furniture or any other asset, that is, those are going out, so those will be credited. So the rule is debit what comes in and credit what goes out. Number two is personal account. Under personal account, all persons or institutions come under personal account, and also capital comes under personal account. Why capital comes? Because capital is provided by somebody. It may be the owner of the business himself or herself, or it may be any money lender or bank. So capital also comes under the heading of personal account. And the third is nominal account. Most of the account heads come under nominal account. All expenses, losses, incomes and gains. Expenses means purchase, rent paid, wages paid, electricity paid, etc. These are all expenses. And income means revenues, that is the sales revenue of the firm or the money received by selling an old machine or old furniture. So these are all incomes. So those will be credited, and all expenses like purchase, payment of wages, payment of rent, payment of electricity, payment of insurance, etc. will be debited, as well as any losses will also be debited. So these are the golden rules under traditional approach to financial accounting. Now, I have selected a short problem consisting of 8 transactions. I shall discuss how every transaction is classified into 2 account heads and how those account heads are treated. That means which account head is debited and which account head is credited. So look at the whiteboard, please. Number 1, A started business with 50,000 in cash. So A is starting a business with 50,000 in cash. So what are the account heads involved here? One is cash and the other is capital, because cash is being introduced into the business as capital. And the nature of account, this is real and capital is personal, right? So 2 account heads, real account and personal account, are involved here. Now what is the rule for real account? Debit what comes in, credit what goes out. So here cash is coming in, so cash will be debited. On the other hand, What is the rule of personal account? Debit the receiver, credit the giver. This capital is being given by the owner, or it may be a bank. In either case, that is capital and it will be treated as giver, so it will be credited, so capital. So we write cash under debit column and capital under credit column. What is the reason? The reason is debit what comes in, and here credit the giver. Right? Now come to number 2. Purchased goods for 10,000 in cash. So Mr. A is purchasing goods for 10,000 in cash. So which account heads are involved? Purchase and cash. Remember one thing. When goods are purchased, that means the goods which will be sold by the firm, then the account head will be purchase only. But when the firm is purchasing any asset, say land, building, plant, machinery, furniture, computer or vehicles, etc., those will come under respective heads. That means when furniture is purchased, that will come under the heading of furniture. When machinery is purchased, that will come under the heading of machinery. When building is purchased, that will come under the heading of building, and so on and so forth. Right? So here number 2 is purchased goods for 10,000 in cash. So the heading will be purchase, one heading will be purchase and the other is cash. So number 2, purchase and cash. These two account heads are involved here. And what is the nature of account? Purchase comes under what? Nominal. And cash comes under real. What is the rule for nominal accounts? The rule is debit all expenses and credit all incomes. So purchase is an expense because the firm has to pay for that. So it will be debited. So we write purchase under debit column. And what is the rule for real account? Debit what comes in, credit what goes out. Here cash is going out, so cash will be credited. So we write cash under credit column. And what is the reason or logic? Here debit expense and credit what goes out. Okay. Now come to number 3. What is number 3? Sold goods for cash 15,000. So A is selling goods worth rupees 15,000 in cash. So which account heads are involved here? One is cash and the other is sales. So two account heads are sales and cash. Sales come under which account heads? Nominal account. And cash comes under real account. What is the rule of nominal account? Debit all expenses and credit all incomes. So sales mean the company is earning money, so it is income, so it must be credited. So we write sales under credit column. And cash is coming in, so cash is debited. We write in the debit column. And what is the logic? Here credit incomes and here debit cash coming in. Right? Now come to number 4. What is the transaction? Purchase goods from X 6,000. Now please take note of this. Here cash is not mentioned. Here it is mentioned that goods are purchased from X for 6,000. This means goods are purchased on credit, not in cash. So the account heads involved are, one is purchase and the other is Mr. X. The purchase comes under nominal account and Mr. X will come under personal account. Right? And what is the rule for nominal account? Debit all expenses and credit all incomes. So purchase is an expense. So purchase will be debited. So we write purchase in debit column. And what is the rule for personal account? Debit the receiver and credit the giver. Here Mr. X is giving the goods to Mr. A. So Mr. A will be credited. And what is the logic or reason? Debit for purchase, debit expense, and for Mr. A, credit the giver. I write in short credit giver due to lack of space. Right. Now come to number 5. Purchased furniture for 4,000 in cash. So Mr. X is purchasing furniture worth 4,000 in cash. So which account hits are involved? One is furniture and the other is cash. Here purchase will not come because Mr. A is not doing business of furniture. So purchase will not come here. The account heads involved are furniture and cash. Furniture and cash. Two account heads are involved here. And you see, both are real account. Right? Now since good furniture has been purchased, this means furniture has come in. So, and the rule under real account is debit what comes in and credit what goes out. So furniture is coming in. So furniture will be debited. So we write furniture in debit column. And for cash, the rule is, for real account, the rule is credit what goes out, cash is going out. So we write cash in credit column. Reason, debit comes in, credit goes out. I am writing in short due to lack of space. Next, come to number 6. What is number 6? What is number 6? Sold goods to B for 6,000. Again, take note of this transaction. Here also cash is not mentioned. This means Mr. A has sold goods to B not in cash but on credit. So account heads are, one is sales and the other is Mr. B. Sales come under nominal account and Mr. B will come under personal account. And what is the rule for nominal account? Debit all expenses and credit all incomes, and sales is income for the firm, so it will be credited, sales will be credited, so we write sales in credit column. And what is the rule for personal account? Debit the receiver, credit the giver. In this case, Mr. B is receiver because goods are sold to Mr. B. So Mr. B is receiver of the goods. So Mr. B will be debited. Reason here, debit, credit, incomes, and debit, the receiver, right? Now come to number 7. Purchase machinery for 10,000 in cash. So A has purchased machinery for 10,000 in cash. So which account heads are involved? One is machinery and the other is cash. Machinery and the other is cash. Here again you see both are real accounts. So both will be real. Machinery and cash both are real. Both are tangible. Right? Now machinery is purchased, and for real account the rule is debit what comes in, credit what goes out. Since machinery is coming in, so machinery will be debited, so we write machinery in debit column. And cash is going out, the rule is credit what goes out. Here cash is going out, so cash will be credited, so we write cash in credit column. The reason, debit what comes in, credit what goes out. Right? Now come to the last one, number 8. Paid wages 5,000. So Mr. A is paying wages of 5,000. So what are the account heads here? One is wages and the other is cash. Although cash is not mentioned here, but since it is already paid, that means cash has gone out, right? So here the account heads are cash and wages. Cash is real and wages is nominal, because wages is expense for the company, for the firm. So cash is going out, so cash will be credited, because the rule under real account is credit what goes out. So we write cash in credit column. And wages is an expense for the firm, and the rule for nominal account is debit on expenses. So here wages will be debited. So we write wages in debit column. Reason or logic, credit what goes out, and here debit expenses, right? So all these 6 transactions are explained. So what we have done in this video, we have learned what is golden rules of financial accounting, the golden rules to debit and credit, how to make debit, how to make credit. And the rules are, the account heads are broadly classified into 3 categories: real account, personal account, nominal account. Real account means anything that is tangible, cash or any asset. Personal account means any person or institution with whom the firm is doing business, and also capital comes under personal account because capital is being provided by somebody. and the rule is debit the receiver, credit the giver. And the third one is nominal account. Most of the accounts come under nominal account. All expenses, losses, incomes, gains come under nominal account, like rent paid, wages paid, electricity paid, power and fuel paid, insurance paid, sales, income, purchases made, all come under nominal account. And the rule is debit expenses and losses, and credit incomes and gains. So all expenses like rent, wages, etc. will be debited, and all incomes like sales will be credited. So these are the golden rules. Here we have discussed 8 transactions, the nature of the transactions, which accounts are involved in every transaction, and which account should be debited and which account should be credited according to this logic, according to this rule. According to this rule, these 3 rules are applied here, are applied on these transactions to see which account is being debited and which account is being credited. Right? So I hope this is enough for this video. I believe you have understood this. Still, if you have any doubt in your mind, if you have any query, please feel comfortable to let me know through the comment section. I shall be more than glad to respond all the relevant queries or relevant doubts. Okay? And if you think that this video is beneficial for you, please do share the video with your friends and relatives. And finally, thank you very much for watching this video. Goodbye and stay well.